It's the most expensive and biggest asset most people will ever own, so you want to make sure you're making the best financial decisions possible. I'm going to explain FHA loans, the pros and cons, but make sure you watch till the end. I'm going to tell you a surprising trick that most people don't know that might completely change the way you think about FHA. Even if you have perfect credit and you've always been told conventional loans are the way to go, this just might change everything you thought you knew and make you take a second look at what option is going to be best for you. I'm Justin Brown, a 20-year mortgage pro, real estate investor, personal finance junkie, and father of four. I have helped thousands of people buy homes over the years, and FHA is a great program that helps so many people, but is it right for you? First, let's look at the common roadblocks that could be a huge weight, potentially keeping you from one of the most important milestones in life, owning your first home. So is your credit not perfect? Well, this program could be a great fit because it goes down to a 580 FICO score with as little as 3.5% down. And if you're going to do 10% down or more, I've actually seen credit scores as low as 520 get approved. Do you not have a lot of funds saved for down payment? Well, you only have to put 3.5% down, and you could even utilize zero down payment assistance programs with FHA. Are you not a first-time home buyer? Well, you don't need to be. With FHA, you don't have to be a first-time home buyer. Plus, any programs that require you to be a first-time home buyer are usually the down payment assistance programs, but their definition of a first-time home buyer is somebody who hasn't owned the home in 3 or more years. So one, if you're not a first-time buyer, it doesn't matter. You can still use FHA. And if you haven't owned a home for 3 years or more, you're going to be considered a first-time home buyer anyways if you need to be for any of the down payment assistance programs. Is your debt a little too high? Well, most people don't realize that FHA is actually pretty lenient and more lenient than most programs when it comes to debt utilization. Plus, you could also use a cosigner with FHA loans as well. Look, FHA is a great way to get started if you can't go conventional for any of the reasons I just mentioned. But the main hesitation and fear of using FHA is it can be much more costly than a conventional loan. For example, FHA has mortgage insurance, which is a part of your monthly payment, and it increases your monthly payment. But with FHA, it's actually there until you pay off the loan or until you refinance, versus conventional, it's a lot easier to remove the PMI without having to refinance or pay it off. You also have an upfront fee that FHA charges that they add on to your loan, which adds to the cost of overall financing using that program. So it can definitely cost you a lot more than conventional would in the long run. But the key before you do conventional or FHA is you just know your options. You compare the two options side by side. You go get pre-approved, find out what you qualify for, and ask for a breakdown on the conventional option and an FHA option, and you could see what they're going to cost you monthly, what they're going to cost you out of pocket, and what they're going to cost you in the long run. If your credit's not that great and you're not putting more than minimum down payment, FHA might end up still being a lot cheaper for you because of your situation. So don't disregard it just because you think it's going to cost you more, because it might not. However, regardless of your credit, regardless of the costs and all that stuff, there is still a major plus that FHA offers that conventional doesn't, that I'm going to get to shortly. But first, regardless of the option you choose, don't buy a home, don't take FHA, don't take conventional if you can't still save at least 20% of your income every month, 20% of your take-home pay. So if you want to make sure you don't end up house poor, you want to make sure you don't end up making a bad financial decision on a home. And the best way to do that is to make sure you're taking on a payment that allows you to still budget and save 20% of your income every month, so you have flexibility and freedom to build a reserve, to save for your retirement, to save for your future, to have money to put, take care of repairs if things come up. So that's going to be one of the most important tips and things I always tell my clients, is to make sure you're able to save 20% of your income every month. Make sure you look at a budget before you buy a home. So now to the fun part with FHA. So my favorite part about FHA that blows conventional out of the water, you could buy a 2 to 4 unit with low down payment or even down payment assistance. With conventional, on a 4-unit property, a 3-unit property, you have to put at least 25% down. On a 2-unit property, 15 to 20% down depending on the lender. So that's huge to be able to buy a multi-unit property for your first property with low down payment or down payment assistance. And you could use 75% of the rents from the other units to help you qualify as income. Imagine being able to buy your first home and have no housing payment. That's called house hacking. House hacking is where you buy a home or you buy multi-units, you rent out the other units, and the rents from those units cover your entire mortgage payment and maybe even cash flow. And cash flow basically means it puts money in your pocket every month. So living there, having all your expenses, including your mortgage covered, and putting money in your pocket every month. So let's say you have some debt. How much quicker would you be able to pay off that debt if you had no housing expense? Student loans, you could probably pay them off 10, 20 plus years sooner without having a housing expense. And that's exactly how I purchased my first home. And so many of my clients over the years have done the exact same thing. And seeing so many of my clients do this over the years, guess what having no housing expense has allowed them to do? Continue to save and buy more real estate and build passive income to pay off their debt. It's completely freed them up to do so many different things besides buying a primary residence and being tied down by that payment and not being able to save and invest to build their future and being stuck, basically waiting until 65 to get Social Security, maybe their 401k, and having a house, thankfully. But the people that do it right and utilize the house hacking strategy, that catapults you so much further ahead with so many other opportunities, because again, you're getting rid of the largest expense most people will have, which is your housing expense. In life, the rich get richer by making their money work for them and by buying assets instead of liabilities. When you buy a multi-unit property as your first home and get rid of your housing expense, it's a true asset at that point and not a liability because it's paying you money every month. The number one way wealth is built in this country is through real estate. And by doing this house hack, that's going to put you in the best position to use this money you've saved to buy this first home to also make money for you as well. So don't discount FHA just yet. And look, if you want to make sure you're not making a bad financial decision by buying a home this year, if we're in a bubble and all that, check out this video here. And if you want more information on house hacking, check out this video. Thanks for watching.